navigate the new tax regime. Kindly note that on this flight, there's no need to fasten your seatbelts. We are guaranteed a safe journey. No turbulence, no bumps, no flops. Just the clarity, insight, and perspective we need for the journey ahead. Our flight time today will be approximately 1 hour 30 minutes, and we expect stable connectivity all through, ensuring a seamless and interactive experience. Thank you for choosing to fly with us at the FinTech Association. Sit back, relax, and most importantly, engage. Thank you. So, if you remember, anytime I get to moderate the FinTech Outlook, I'm always your captain, and I always take you on a ride of your life. Have you ever flown any plane that has gotten to the altitude of 200,000? Definitely not. Yeah, but this is usually a different one, and you're assured that, this flight will be safe. So, so we're happy that you could join us today. We're really glad that you choose to be part of today's conversation. We have so much to talk about, and we want to make the best use of the time we have today. At the moment, a poll will be coming up. We want our participants to please take that poll. We want to feel your pulse at the beginning of this event. And the poll is just trying to understand to a little why you decided to be part of today's event, and for us to understand your concerns as well, so that our conversations, directly addresses them, and that at the end of this event, you are able to leave with action points that you can definitely implement in your company or in your as a person or as a director, as a board member, whatever level, career level that you are at the moment. Once again, welcome everyone. For the welcome remarks, I'd like to invite our president of the FinTech Association of Nigeria in person of Dr. Stanley. Dr. Stanley, please, are you on call? You have the floor. Sean, can you confirm if Stanley has joined, or we should take his welcome remarks maybe later on so that we can make progress with today's conversation? So while I'm waiting for a confirmation, I think I'll just try and talk a little more about why today's topic is very crucial. I believe that every one of us here, you will agree with me that today's conversation is very crucial. Towards the end of last year, there was nothing I didn't see on social media. There were some people that the kind of panic that was exhibited on social media, for me, it is unprecedented. Some people believed that by the time it was 1st of January, the monies in their accounts would have been depleted because tax would have been deducted automatically, from their bank accounts. I want to believe that a lot of fintechs probably even felt this as well. Maybe they thought that their monies were not safe with you, so they quickly moved their money away, just looking for a way to ensure that they are able to avoid paying taxes basically. However, Nigeria fiscal landscape is evolving with the transition from the Federal Inland Revenue Service to the Nigeria Revenue Service under the new tax framework. We are witnessing not just a change in name, but a broader shift in tax administration philosophy, one focused on efficiency, digitalization, transparency, and expanded revenue capture. At the same time, Nigeria's fintech ecosystem has grown into one of the most vibrant in Africa, powered by innovation in payments, lending, wealth tech, and cross-border solutions. Fintechs are not only transforming how Nigerians transact, they are also becoming critical partners in tax compliance, reporting, and revenue collection. Today's discussion sits at the intersection of these two powerful forces. The first one, a modernizing tax regime seeking to widen the tax nets, improve compliance, and leverage technology. That's the first one. Then the second one is a rapidly expanding fintech sector, navigating regulatory complexity while driving financial inclusion and digital transformation. So the key questions frame these key questions frame our conversations for today. First of all, how does the new tax provisions impact digital transactions, platform-based businesses, and embedded finance models? The second question, what are the compliance and reporting expectations for fintech operators? Third question, how will tax authorities leverage data from payment system? And the last question, how can regulators and fintechs collaborate rather than collide? So this is not merely a compliance discussion that we are having. It is a strategic one. Tax policies influences investment decisions, product design, pricing models, and cross-border expansion, and even capital raising. For fintech founders, tax is no longer a back office issue. It is a boardroom conversation. For regulators, fintech is no longer a niche sector. It is central to national revenue strategy and economic formalization. As we begin, I encourage you to think beyond obligations and penalties and instead explore alignments, how policy clarity, regulatory certainty, and industry cooperation can position Nigeria as both a fintech powerhouse and a model for digital tax administration. With that, let us dive into this very critical conversation. And today, our first speaker will be
Yes,
will be
yeah.
okay, Shim. Yes, please. Is Doctor on
Yeah, I
call
was going
now?
to say Dr. Ekwe from phone. Yes, please.
Oh, fantastic. Doctor. Okay, so the welcome. Let's quickly have the welcome remark by our president of the Fintech Association of Nigeria, in person of Dr. Stanley Jacob. Good afternoon, Doctor.
Good afternoon, ma'am.
We are happy to have you here now.
Thank you. So, good afternoon, distinguished guests, our members of the vibrant FintechNGR community, our hosts, and the panelists and speakers. We are really privileged and grateful at the same time to have you. It is my honor and privilege to welcome you to today's 2026 Outlook session. So FinTech in Nigeria 2026, navigating the new tax regime, is a theme we carefully selected, given the times that we are in and the topic that is in the hearts and the minds and on the lips of almost every Nigerian that owns a business or interacts with one. As we step firmly into a new year that is promising both a remarkable opportunity and significant complexity, looking at the topic, I can think of no more timely or even a consequential conversation for our ecosystem to be having right now, if not about how fintechs and our fintech Nigeria ecosystem should interact with the new tax regime. We are gathered today virtually, yet with great purpose, to confront a subject that has historically made many founders of fintechs and other companies, startups, many operators of both small and large corporations, and innovators in our space deeply uncomfortable. And this thing is taxation. And I say confront deliberately because we can't avoid it. Avoidance has never served our ecosystem the best way. And just to go forward to say the Nigerian tax landscape is undergoing its most significant structural reform in a generation. And the Finance Acts of recent years, the ongoing harmonization of tax administration, and the Lagos Internal Revenue Service increasingly sophisticated approach to the digital economy, because with Lagos being the largest economy that we have in Nigeria, we see more active engagement for most of us that are in Lagos. And for other states, their internal revenue services, we have seen a more digitized and sophisticated approach to the digital economy. And it means that we are going to see less of ambiguity and an era where fintechs and startups could operate in gray areas if they don't have a clear understanding of how the tax regime should work. The new regime that we are seeing now demands clarity. We've seen even the highest people in the country the biggest politicians. We've seen them misquote some things around the new tax regime, and we later see the tax drivers coming to say this was quoted wrongly. So it just tells us that the new tax regime demands clarity. It needs competence. It needs compliance. And as an ecosystem, we must rise to that demand. Why does this matter so profoundly for fintechs and startups specifically? It is because our sector sits at a central point where we are now contributing significantly to Nigeria's growth, Africa's growth, and to the GDP. We are technology businesses, we are financial services businesses, and we are often marketplace businesses. And increasingly, we are businesses operating across multiple jurisdictions, not just within Africa, but even across the globe. Each of these dimensions carries different and distinct tax implications, from VAT on digital services to cybersecurity levy to withholding obligations on transactions to transfer pricing consideration for those of us that are doing cross-border transactions and operations. So if we get it wrong, it cannot just be a regulatory inconvenience for us now. It's a risk that can wipe out key players and even an entire ecosystem if not carefully managed. Beyond compliance, there is a strategic dimension that I urge every founder and executive listening today to internalize. Tax knowledge is competitive advantage to any business. The startups and fintechs that understand their obligations, that build tax efficient structures from the ground up, that factor tax planning into their unit economics and fundraising model will have structurally stronger businesses. Those that discover their tax exposure late, in the middle of a due diligence process or one or two regulatory audits, will pay a steep price that goes far beyond the tax bill itself. Perhaps most importantly, today's conversation is about collaboration. FintechNGR was established precisely to serve as a bridge for the ecosystem between our industry and regulators, between innovators and policymakers, between the pace of technology and the measured deliberateness of governance. The presence today of Dr. Ayodele Subair, our guest from LIRS, and some other stakeholders. I could see our former deputy governor and a member of the board of trustees. We have executive from Layfort, executive from OPE, and other stakeholders. For me, this signals the spirit of engagement, that willingness to sit on the table and walk through complexity together is what will determine the maturity and the long-term credibility in our fintech ecosystem. So I want to acknowledge all our panelists, our speakers, and thank them specially on behalf of the board and the governing council. Thank you for bringing extraordinary depth across the operational, legal, regulatory, and advisory dimension of this subject. This is the caliber of conversation that our members deserve. And I'm grateful that you are here to give us your expertise for this session. So we thank you, and for the startups and the stakeholders that will be listening today, whether you are a seed stage startup that is incubating or you're already a unicorn, and whatever part you play, we must say that this is a session for you. Today's session is for you. Take notes, ask questions, engage, and then act, which is most importantly, because in 2026, the knowledge of the tax environment is foundational and very important to your business. On this note, ladies and gentlemen, I welcome you all to the FintechNGR 2026 Outlook and wish you an exciting time ahead. Thank you very much.
Dr. Stanley, thank you for that compelling welcome remark. It has set the right tone for today's conversation. We'll be moving to the next conversation, which is the keynote address to be delivered by Dr. Tunde Lemo. He is the chairman, Titan Trust Bank. He's also the former chairman at Flutterwaves and former deputy governor at Central Bank of Nigeria. It will be giving us the broad perspective, regarding this tax reform. Good afternoon, sir. Doctor.
Good afternoon. Distinguished guests, ladies and gentlemen, panel members and members of the FintechNGR. And thank you very much for inviting me to present the keynote address. I think Dr. Stanley has said, he set the ball rolling by, he has set the ball rolling. Are you hearing me, please?
Loud and clear, Doctor. We can hear you.
Okay. He has set the ball rolling by looking at the key issues that we have to discuss. And within these 10 minutes that I'm giving, I'm going to be talking about the overview of tax reforms in Nigeria, the key changes for fintech, board oversight and governance of tax risks, board priorities for fintech, challenges and opportunities, and then the next steps. Of course, we all know that the new tax law has actually condensed about 70 fragmented pieces of tax legislation into 4: the Nigerian Tax Act, the Nigerian Tax Administration Act, the Nigerian Revenue Services Act, and the Joint Revenue Board Act. And of course, these laws are mainly effective with the exception of NRSC and JRB, which started from last year. What are the key changes that we are seeing as it affects fintech? Of course, we look into the area of capital gains. In the area of capital gains, the chargeable income is an area where the revised tax rate has been moved to 30% for companies, and the revised exemption threshold for sale of shares. And then, of course, revised method for computation. Development tax levy and effective tax rates are also new. New development tax levy of 4% is replacing all the education tax and other things we had before. And of course, today, to prevent tax avoidance, the minimum effective tax rate has been fixed at 15%. Of course, there's renewed focus on value-added tax. VAT compliance is now mandatory for expense deduction and capital allowances claim. Anti-tax avoidance rules are also applicable. Increased tax liability where a foreign subsidiary's estimated tax rate is lower than 15%, or where foreign subsidiaries' dividend is deemed distributable. There is also input tax deduction, the stamp duties, and new reporting requirements. These are all new rules that are there. But what concerns us really is the board oversight and governance of tax risk. This is what really should bother members of the board. And what are the things we should be looking at? Strategic tax governance is key. We should, of course, establish clear tax appetite and align tax strategy with overall business objectives. We should also have effective oversight and ensure that the board regularly review tax policies, risks and exposures, and compliance status. There must be robust control process to ensure we implement strong internal controls and regular assessments to identify and manage tax risks. We must also be transparent in our reporting. We must promote accurate, timely tax reporting and open disclosures to stakeholders and the regulators. We must, of course, have skills. We must have skill awareness, maintain board level tax expertise, and continuously embark on training on emerging tax risks and regulations. Of course, the board priorities for fintech are as follows. Governance in fintech ecosystem is very important. We must maintain strong governance to balance rapid growth with regulatory demands in emerging spaces such as crypto, peer-to-peer lending, digital banking, and so on. We must have clear accountability, effective risk management, and transparent reporting. We must leverage tax incentive, that is research and development credits, to attract investment and support sustainable expansion. The board must provide leadership in regulatory engagement, foster open, proactive relationships with regulators. The board must regularly review regulatory development and ensure compliance. The board must engage directly with policymakers to build trust and credibility. And the board must be constructive. They must have constructive dialogue with policymakers, encourage participation in industry consultation and policy discussions, engage constructively with policymakers to help shape favorable regulations and support long-term growth through ongoing dialogue and collaboration. Of course, this new law provides opportunity for us as fintech operators. And where are those opportunities? The opportunities are in the area of leveraging incentives, economic development incentive, investing in tax-exempt instruments like FGA and state bonds, leveraging new refund rules. Fintech can now apply for VAT refund, and the Nigerian Revenue Service, NRS, is mandated to respond within 30 days, subject to other conditions. Of course, we now have opportunity to approach tax ombudsman in the event of dispute. Fintechs are advised to engage the Office of the Tax Ombudsman on protracted or difficult tax disputes with tax authorities. The board can commence cultivating relationship on behalf of the wider fintech ecosystem. The foreign exchange area provides challenges, though. There may be challenges due to limited access to FX at official rates, because the new rule says that you are on your own. If you do any rate above the official rate, you may not be able to, it may not be chargeable or tax deductible. There is also ambiguity in reporting requirements. The requirement to submit customer returns to NRS need clarification. For existing customers, what nature of transactions are to be reported, inbound or outbound transactions, and so on and so forth. As I begin to conclude, we should begin to look at what are the next steps as we commence the implementation of this new tax rule. For me, it is having a deep dive impact assessment. We must be able to conduct a detailed assessment of potential impact areas, analyze the impacts of identified impact areas, including opportunities to our businesses, update or formulate tax strategies, policies, and processes to ensure compliance and mine identified opportunities. We must also look at tax risk assessment on pre-tax reform years, review existing transactions to identify any gap or risk for non-compliance, and then assess the financial and reputational risk and identified gaps. We must also build capacity and use experts, evaluate the need for training board members as well as other relevant stakeholders, and engage reputable experts for tax compliance, advisory training needs, especially for strategic transactions. Tax should now be at the centerpiece of all our strategic action to avoid profit depletion. Once again, I want to thank you for inviting me to share my thoughts with you on this subject matter. Thank you, and God bless you.
Thank you, Doctor. Thank you, Doctor, for that very detailed presentation. Within 10 minutes, you actually highlighted all the key changes in the tax law and as it affects, the fintech sector. Thank you very much, sir. And you've given us also a perspective, the board perspective to this conversation. We appreciate your presence, Doctor, and thank you for impacting us with your knowledge this afternoon.
Thank you very much.
Yes, sir. So we'll be moving to the next item on our agenda, and it has to do with we're supposed to have a fireside chat at the moment, but I'm told that I think our discussant is having issues joining. So when he's on board, please just let me know. But so that we don't take so much of our time, I think at this point in time, we can just have the panel conversation. It's going to be a very practical session, and we have very competent, successful professionals innovators, to drive this conversation. So I would like to, for this panel discussion, we have three persons, discussants rather. The first person we have is Dotun Adekunle. He's the COO of OPay. Hello, Dotun. How are you doing this afternoon?
I'm fine, thank you, Tony. Happy to be here. Looking forward to a productive message.
Yes. So I remember that you were part of the panelists for last year as well, and you left a memorable impact on every one of us. So we're happy to have you on this call again. We also have, yes, we also have Tim Siloma. He's a tax partner at PwC. Hi, Tim.
Hi, Captain Toyin. How are you doing?
I'm doing fine. Thank you for using my title. I like that.
Well, the cruising speed is excellent, right? And Tunde seems to have been a co-pilot for you and has taken us on a very cruising and high proper altitude. So yes,
Yeah.
I'm happy and excited to be as part of this panel, right? I wasn't part of the last year's panel, but I'm absolutely excited to be part of this panel this year, right? Yeah. I
Anyway,
don't know. Do you
yeah.
need me to introduce myself further, or just the intro you have done is just has done justice for it?
So because we're trying to make the best use of our time, please, if you don't mind, I'm unable to introduce you
Okay.
further. Yes. But
Brilliant. Okay.
we know who you are already, and we like the energy that you bring to the room. So thank you for joining us.
Absolutely. Thank you very much. Appreciate it. So
Yeah.
go ahead to the next panelist. Thank you.
Yeah. So for the third panelist, we have Olamide Obajimi. He's the partner in Ed Tax Practices Group at Olaninwo Ajayi. Hello,
Hello,
Olamide.
everyone. Happy to be here.
Great. It's good to see you as well.
Yeah.
Thank you for joining us for this conversation. So and we've carefully for the audience, we were careful enough to in selecting the panelists for this conversation because they bring different lenses, to this conversation. And we wanted to ensure that at the end of the day we have a 360 view, regarding the tax reform and how it affects the fintech sector. So I would Dotun, I think the first question, you are talking from the operator's reality. Of course, everybody knows OPay. And one of the reasons we know OPay more and more is that at the beginning of this year, I think you guys sent a circular to your customers, telling them you were informing them that you would start charging VAT for every mobile transfer. And as usual, the whole of social media was on fire. And so the whole of social media was on fire. Now, what was interesting is that they had been banking before now because that particular law was existing even before this new tax reform, right? It wasn't something new, but I guess you people were just bringing it to probably let us know what happened. Don't let me think for you. Of course, we have you here to clarify that. So tell us what happened. And so how have you been able to adjust? Now, you can talk in relation to OPay and the whole fintech ecosystem as well, which is what were the first operational adjustments, you had to make after this new tax reform? How has it impacted the work you do and the whole fintech ecosystem?
All right. Thank you so much. Let me copy Tim now by Captain Tony. Thank you so much for the question. And yes, when we made announcements sometime last year about charging for some additional or for taxes, which had been even an old tax law, that went agog. Everywhere was upside down because of the announcement that we had made. But in that particular instance, it's not that we're not taking these taxes ourselves, but the law was reinterpreted for us that it was really necessary for us to allow the charge to go to the customer. And as an entity, we should not bear those taxes on behalf of the customer, just something that we were doing before. And so that we had to communicate that this is the way the law has to be interpreted correctly. But let me come to the first question about adjustments when you look at the new tax laws. At OPay scale, the first adjustment was not in terms of increasing fees. It was increasing clarity. Because we process millions of transactions daily across wallets, across merchants, across agents, the immediate priority for us was to clearly separate what constitutes actual revenue versus funds that simply pass through our platform. We had to upgrade our ledger target systems. We had to tighten revenue attribution. We had to align our finance team and our tax team with the product and engineering team very, very quickly so that they could think in consonance. Everybody can work together to see how things will be aligned going forward. Because we knew that at scale, a very small misclassification multiplied across millions of transactions becomes material exposure. So our first response was like, we need to be very precise with this. We have to ensure that every transaction is correctly categorized, they are taxed appropriately, and that was defensible reporting documented for everything that we did, so that the customer knows why you're charging me for this. The regulator knows why you interpreted this way. You can show the evidence that logs are there. So overall, I would say that the new tax laws and the way that it came, what it did for us eventually and for the whole industry is that the reform has essentially forced the operators to become mature operationally. So it's a good thing in that regard. Thank you.
Thank you for that response. So, you talked about how you had to upgrade your system, and I think that is instructive for other fintechs as well that probably are part of this call. In case they're still thinking of what's the next step forward. Dotun just told us one of the things that they did to be able to comply with the new tax reform. So thank you for sharing that practical knowledge with us. I think we'll be moving to the strategic tax and advisory lens, and this question is for you, Tim. We want to hear your own perspective. Which provisions in this new tax regime are most consequential for fintechs, in your own opinion? And what do you think is the what do you think is the intent behind these reforms that fintech should have at the back of their mind as they work towards compliance and implementation?
Thank you very much, Toyin. Yeah. And to be fairly honest to the speakers that have come before me, I think Tunde has really laid out what has really changed, right? And I think that practically has set the stage for an easy conversation for me, right? But just before I start, I think we know that there are two certainties in life, death and taxes. But I dare say today that there is a third certainty in Nigeria, a new era of radical tax transparency that is going to be fueled by technology and data. We are talking about a fintech revolution in Nigeria that will shape the tax landscape. So one of the things that we really have to think about is the why, the how it's unfolding, and finally, how the people sitting on the call today can turn that new era into a strategic advantage. But perhaps let me just build the picture here, the broader picture, right? So the broader picture is we need to understand where the government is coming from, really, right? And that speaks to the question you had earlier asked, which is the second question, right? The truth and the reality is Nigeria faces three structural challenges that must be ruthlessly tackled. And that had to be one of the things that the new regime and administration of President Bola Ahmed Tinubu had to deal with, right? Allow me to call them the triple whammy. Why do I call them the triple whammy? These are three structural challenges that we face. One, there's the oil trap, right? Over the years, we have depended on oil to fund the budget of Nigeria. But that comes with its own structural challenges because we are at the mercy of the global oil prices. To be fairly honest, that is a bandwagon or a roller coaster we must come off, right? The other challenge is what I call the gap. The national tax to GDP ratio in Nigeria is 10%. Compare that to the average African countries. It is 18%, meaning that Nigeria is collecting almost 50% of what other African countries are collecting. Why? It's because we have what we call a hidden economy. And I'm sorry, I will not take the usual stance to say that we have an informal economy. We actually have a hidden economy that they don't contribute to the fiscus, right? And they place unfair burden on our listeners sitting here today. And then the last but not least is the cost. The cost of collecting taxes in Nigeria is about 4%, right? Global average, 1%. To be fairly honest, it means that we are spending every other country globally four times more in collecting our taxes. So to be fairly honest, there was a real need to change the structural fabric of Nigeria in terms of collection of taxes, right? Now, I come to the question is, how is this unfolding? The reality of it is, we already know we have the new tax reforms, but the second pillar of these tax reforms is going to be driven by technology, right? So technology, when I talk about technology, I'm talking about the digital infrastructure and the data foundation, right? So we know that Nigeria, the FRS had started on the digital journey, right? With tax promax, with automated tax processing and all that. But really, these were vehicles that really did not have the fuel. That fuel is actually data, right? So one of the things that we need to think about, and it's redefining the Nigeria tax space that we as fintech people need to be aware of, is the government is looking for a single source of truth. They're no longer looking for a silo system of information, because you already have information sitting in CSE, you have information sitting in Nigeria Stock Exchange, you have information sitting in Nigeria Customs and the NRS. No, they're looking for a way to unify that data into a single source of truth, which will enhance transparency, efficiency, and accuracy, right? So this is actually going to be a game changer, right? So the question for me, and I've had Tunde speak about it in a very succinct way, is to say that it actually presents opportunity for everybody sitting here. So there are opportunities where we are saying is, we are fintech people, right? What drives us? What do we wake up every day to do, right? We are technology or digital infrastructure and data providers. So that gives us an opportunity, right? How do we co-create that digital future for Nigeria, right? The other thing that is, obviously, some of these things are blue sky thinking, right? And they require what we call angel investors, venture capitalists, and all that kind of stuff. The reality of it is, this law was very forward-looking, right? I must say that the people that really created this did not just try and revise the existing law, they actually brought that law into a futuristic state. We know that really technology, investments in technology take time to mature, right? So there are actually opportunities for angel investors, for venture capitalists. So we need to think about it and look out for those, right? Then one of the other things that we really have to think about as an opportunity is the reality of it is, we have what we call unicorns in Nigeria. That is no longer a secret, right? Nigeria's fintechs have become the most potent and the most viable tech tech companies out there. So they're not only investing in Nigeria and creating value in Nigeria, but they're creating values across the country, across Africa. So the question is, what are the structuring thought processes that I, as a creator of tech, I should be thinking about? The reality of it is this particular tax law has created some opportunities for Nigerian-owned tech companies to actually set up locally, use the resources, the 200 million and the 200 or the 220 million resources in Nigeria to be able to attack the African market. So there are opportunities created by this, and those are the opportunities I think we need to capitalize from this. I'll stop there because I believe there are other questions, but yeah.
Yes, there are other questions because, and thank you for emphasizing, um, thank you for re-emphasizing the fact that there are so many opportunities and how fintech, needs to see this new tax reform as an opportunity for them to be able to scale in the right way, even beyond Nigeria. And Dotto also said something very valid. He talked about how they had to correct they had to upgrade their system because an error in non-compliance with the tax law, just a day will rack up a lot of losses on their part. So these are very critical things that I think every fintech founder or CEO needs to start paying attention to. And it's not something that they can just sideline. Thank you for that. Olamide, please, you're the legal guru in this place, and I'm sure that right now a lot of fintechs are thinking that, as regards the new tax law as well, what are the contractual protections should fintechs prioritize in relation to the new tax law? How does that impact um, how they should get into contractual agreements either with their partners or with new alliances? What's your perspective to that?
Okay, so thank you very much for the question. In terms of alliances, I think the first thing is that all contractual relationship must be well documented. And in documenting, these contractual obligations, right, they must be within the framework of the license of the applicable player within the fintech space. Apart from the fact that it must be structured within the scope of the license of the fintech player, it's also important that even where this relationship exists, the fintech player should ensure that the activities that they perform is within the permission, granted by the license they hold. Now, in relation to specific provisions in contract that relates to, how they deal, they must ensure that when it comes to the applicable taxes, whatever it is must be properly documented in such agreement. So if there are obligations within the contract, especially in relation to stamp duties, apart from the fact that the law, specifies, the applicable party, to pay the relevant stamp duties in transaction, parties may amongst themselves, decide to say, what, with respect to these, maybe it's going to be a point of us, sharing the applicable stamp duties or allocation of rights within, the way they deal with this transaction. That is one. So again, where it has to do with, offshore service providers to probably fintech in Nigeria, consideration around value-added tax, the applicability of value-added tax on such transactions must be key, as we all know that the destination principle has been admitted as part of our rules of tax since 2019, which although according to the case in the Vodacom and Gazprom, the court has said that it has always been part of our laws, but probably it wasn't clear, and that was why the disputes went to court. But if you look at the Finance Act from Finance Act 2019, the issue of the requirements for a non-resident provider to register for taxes within the Nigerian framework is now very well clearly stated in the law, meaning that the Nigerian beneficiary of such service must ensure that the applicable value-added tax is paid, and the non-resident provider of such service must ensure that that service provider is registered for VAT in Nigeria. And apart from that, we will also look at it from the framework of income tax. So we now have the significant economic presence order, which has been part of our law since 2019, where Nigeria decided to take the unilateral approach in dealing with issues around the digital economy. If you look at how the laws have been over time, the liability to tax is a function of connecting factors. And when we look at traditional, tax rules, it looks at physical presence. But because the world is fast, turning to a global village, and the fact that countries realized that they were losing a lot of money to other countries, especially to the advanced countries, the OECD, G20 came up with a framework to ensure that activities are taxed, where they originated and no one is cheated. They came up with, some, we call them the BEPS action plan at that point. And in devising the BEPS action plan 1 was dealing with, issues around the digital economy. And Nigeria decided to take the unilateral approach because at that point in time, the OECD was yet, to bring up an accepted framework for the taxation of the digital economy. And because of that, countries like, for example, India introduced the population levy, Ireland to introduce digital services tax, and Nigeria decided, to look at its old, framework and introduce a new Section 13 at that point, the provision in Section 13 that deals with, how the activities within the digital space will be taxed, and it introduced that connecting factor in the law. So if you are dealing with an entity that is a service provider in a treaty country, then I think our TTT is yet to be updated to take into consideration that digital aspect with respect to double tax treaty. But where the service provider is now in a treaty country, then that means that the Nigerian Tax Act, because all these provisions are now still embedded in the Nigerian Tax Act, and wherever you are, wherever you may be playing, you must understand the fact that you may be liable to tax in Nigeria based on the income you have derived from your activities in Nigeria. And if that is the case, you must be able to look at the structuring of your agreement, where there are technical services that you render as a non-resident company or a non-resident service provider to fintechs in Nigeria. Then you should also understand the fact that you may also be within the framework of the Nigerian legal and tax system. So in structuring your agreement, you must have mutual understanding, get good understanding of those tax framework and how it affects. I remember during my year's training as an international tax lawyer, we're told that tax should not be the basis why businesses should look at set up in certain jurisdiction. But the reverse is the case. It may be a classroom, talk to say tax should not be a determinant. And probably that is why we are moving towards tax neutrality with the advent of the two-pillar solution, whereby the law is now saying that, okay, if you don't pay the tax here, you will pay it here. Any which way it is, tax is a great consideration in determining when you do business, when you want to play. And as fintech, service providers, as fintech players, we must have that at the back of our mind. And I must also say big kudos to Dr. Lemo. If I was thinking whether he was a tax consultant when he was delivered, because he touched all the areas. So maybe you are becoming a tax consultant, but I believe it's just that you have a deep sense of awareness as a boardroom player. And kudos to you. Thank you very much.
Yes, Olamide, thank you very much for your contribution. You see, that issue of stamp duty is very common. It's usually an afterthought when people are having contractual agreements, and it has to be at the center of the conversation. I've seen instances whereby after the contract has been agreed upon, and it's like, so who's going to pay for the stamp duties? Oh, sorry, we didn't factor that in because whether you like it or not, whoever is going to pay for it is going to, they didn't take it into consideration when they were determining their profit margin. So it's going to have an adverse effect on your bottom line regardless. And that's why it's very important that we start paying attention to all those tax laws, and we start incorporating it in our day-to-day dealings, in every of our day-to-day dealings and negotiations. Thank you very much. Please just we'll take a pause at this moment. I'm bringing back my panelists, but I want my panelists to at least grab a bottle of water. I want you um to wet your throat before we go for the second run. But while we are doing that, I'd like to call on, I'm sure that many of you are here on this call, probably you're here to hear from the chairman of LIRS, right? So I will be bringing him on board now to have a brief, it's a fireside chat, which will be moderated by our quintessential Vice President at the Fintech Association of Nigeria in person of Dr. Jamila, to um to lead this conversation that we'll be having. And the fireside chat is about policy intent, compliance, and opportunities for fintechs. Yeah. Dr. Jamila.
Thank you so much, Toyin. And we are so honored and welcome to have Dr. Subair on the call with us today. I understand that he has a quick presentation that he'd like to deliver before we go into the fireside chat. Hello, Mr. Subair. How are you doing, sir? Thank you so much for joining us today.
Good afternoon.
Good
I'm glad to
afternoon.
be here.
Yes, yes. I understand you have a quick presentation you'd like to deliver for us, right?
Yes.
Okay, we'll go into that first. We'd love to hear from you directly first before we go into the fireside chat.
All right.
Okay, so we'll give you, Toyin, can you please allow for him to share?
Trying to share the slides.
Yes, I believe you can share your screen now. Thank you, sir.
All right. Thank you very much for having me on the show, Dr. Jamila, and all the organizers of this webinar. So I think is Sean the one controlling the slides? Can you change the slide now? Okay, so it starts with policy intents, operational readiness, governance and enforcement, collaboration, and then I'll close. Can you hear me, Jamila?
Yes, sir, clearly.
Okay, so in terms of policy intent, the new tax regime is not about imposing new taxes, but about modernizing Nigeria's tax system to reflect today's digital platform-driven economy. The objectives are quite clear, and they're as following: to simplify and harmonize tax laws, to digitize operational processes to enhance transparency and accountability, as well as reduce significantly avoidance and evasion gaps. It's also to broaden the tax base fairly, incentivize compliant taxpayers, and protect the most vulnerable at both household and entrepreneurial levels by ensuring that both businesses and individuals who comply can legitimately benefit from incentives such as zero CIT for qualifying small companies, statutory deductions, tax credits rent relief, and progressive thresholds designed to shield low-income earners. Another policy intent is to strengthen coordination across all levels of government. Then we move to operational readiness. So for fintechs operating in Lagos, the reforms bring clarity rather than uncertainty. They define expectations around VAT on digital and remote supplies, establishes registration and reporting obligations for all virtual asset service providers, the fintechs, cryptocurrency companies, and so on and so forth. It strengthens record keeping and filing requirements aligned with anti-money laundering and KYC, Know Your Customer frameworks. In terms of governance and enforcement, we recognize that the concern that regulation may stifle innovation. This is, however, not the intent. The new laws deliberately balance firm enforcement against deliberate non-compliance with certainty and fairness for compliant businesses. The new tax laws strengthen enforcement tools, but also expand taxpayer protection, including administrative reviews, alternative dispute resolution. It contains a strengthened tax appeal tribunal framework and also introduces a tax ombudsman. This reflects a shift from previously enforcement-heavy taxation to a compliance-led, service-oriented system. So in terms of collaboration, ultimately the success of these reforms depends on collaboration. The laws promote unified taxpayer identification, secure information exchange, and technology-driven administration. For the Lagos State Internal Revenue Service, this creates opportunities to work closely with fintechs on digital compliance pathways, taxpayer education for MSMEs, platform-level integrations, and responsible data use. We see fintechs, just like we see most other companies, as adversaries. Not as adversaries, I'm sorry about that, but as partners in building a transparent, efficient, and sustainable revenue system. So in terms of the key takeaways, the success of the new tax laws will be measured not by enforcement alone, but by trust, clarity, and collaboration. Lagos State is committed to regulatory certainty, innovation-friendly administration, as well as sustained engagement with the fintech ecosystem as we implement this new regime together. So that will be my short presentation introducing the various aspects of the new tax laws.
Thank you so very much for that fine presentation. And as you can see on the call today, we have nearly 300 people have taken their time, their lunch break, if you will, to kind of come and spend some time with us. So good afternoon, everyone. You are joined today by the man who is literally, he's leading the agency that generates the revenue more than many African countries combined. And if I could say that Lagos, if it were a country, it would be the 5th largest economy in Africa. So you're sitting right at the helm of that, alongside the nations that are the size of Morocco and even Algeria. So Chairman Ayodele Subair, you are most welcome.
Thank you very much,
I
Dr.
do
Jamila.
have a few things here for you today. I am so excited to have been given the opportunity to do this fireside chat with you, really representing the heartbeat of your city, of Lagos. We have the fintechs that are here, founders, dreamers, transformers, and even unicorns. They're all here to really get to the heart of the conversation, which is around the changes of the taxes. So we're going to do this in 3 parts, Mrs. Subair. We're going to do a deep dive. So I just have a few questions that I hope that you'll take the time to go through that with. And then we're going to do a lightning round, nothing too serious, but definitely just want to get, your quick thoughts on a few things. And then we'll do a final call to action. Is that okay with you?
That's fine.
All right. Then we will take this time to just kind of dive right in. The first question I have for you, sir, when it comes to managing an economy as large as Lagos, which is really, like I said, the larger than most African nations, it's a heavy mantle. You've been described as a quiet achiever and one who lets the data actually speak for itself. But when it comes back to your earlier days in working, before this $1 billion, $259 billion to be exact, spreadsheet, what was the specific moment when you realized that tax wasn't just about collecting money, but about building a nation? And what is the why that keeps you grounded every day in your job, in this very high pressure job at that?
Okay, so a lot of people look at tax as a means of getting revenue. But we in the regulatory environment think differently. Tax is something that is necessary for development. So we want to operate a civil society. So we start with a contract, the social contract. The government is expected to provide infrastructure and high quality social services, whilst the other side of the contract is the citizenry. They are expected to pay their taxes as honestly as they can. Together, we can then form a civil society, a society that has a certain level of standard. In other words, basic infrastructure, and also people are able to live and earn a living without too much stress. So how do we get there? We can only get there when people start to pay their taxes. And from my own perspective, well, I've always been in an industry, in a finance industry. So I've always known what taxes are all about. So it's not as if I got the job and started thinking, hey, how are we going to run this state? We need money. So whip in hand, we go after businesses for them to pay taxes. No, it's not like that. So we run a system whereby we do a lot of advocacy, and we expect that people will also want to share that dream with us of making Lagos a state that we would all be proud of and in which we would all want to live in. So people should not see tax as a burden. It's just their contributions to making a good society.
Very good. I'm glad you mentioned that, and it takes me back to a quote that you recently said, and I'm going to quote it. It says that we must give taxation a human face. The fiscal social contract hinges on the willingness of citizens to pay their tax in return for the provision of public service. So in an economy that's of this size, of Lagos, it is easy for individuals to feel like just a drop in the ocean. So how do you ensure that Lagos actually grows into a global mega city with the human face? What is the one project that you have in mind that is going to be funded by our tax revenues, that every Lagosian can look back and say, I helped to build that?
Okay, so it's difficult to just take one aspect or one project because we have multiple projects running simultaneously under the distinguished leadership of Mr. Governor Mr. Babajide Olushola Sanwo-Olu, he has what he call the Themes Plus agenda, which set the various pillars on which his administration relies on to run and develop Lagos State. So under the different pillars, the ones that will appeal to most of the citizenry, of course, would be the ones that create an impact on their lives the most, especially the low-income earners. So probably we can point to looking at multimodal transportation. So the administration has the railway system, which is like mass transit. It moves a lot of people from different parts of the state to the other one. There's supposed to be 5 lines. Right now, one is fully operational, one will soon come on stream. And this serves a major, it reduces a major burden for a lot of Lagosians. So apart from the railway system, there's also the ferry system. We have ferries across the various divisions of the state, mostly from moving people from places like Ikorodu to Lagos Island, to the CMS station, and so on and so forth. We also have the BRT buses, which also help in moving people from one part of the state to the other. Now, all this is possible because some people pay their taxes. We deal with individual taxes, while the Nigeria Revenue Service deals with all the corporate taxpayers. So in Lagos, we just want to make life easier for all the citizens. And our governor is doing a very good job at that.
I agree completely. So thank you so much for that. So yes, Lagos is absolutely the engine in Nigeria. I believe that the numbers that I've seen, Lagos generates as much revenue as like 31 other states combined. So when we see that engine, it's actually powered by the small businesses, right? And when I think of that and I start thinking of the ecosystem that we're talking to today, which are the fintechs, is it right that the 2026 reforms is actually going to have 0% tax rate for small companies? And if so, that's going to be a huge win. Is there any kind of digital catch that comes with getting that kind of incentive? Or are there other ways? I believe that in your tenure, you've been able to take us from a paper-based system to now a cloud-based system. So that's a major, should I say, kudos for the hat of LIRS. So how is the digital transformation going to be able to help many of these small businesses and individuals who are still very much in a paper-based economy? How are we going to help to have LIRS more as a coach, maybe during this process, than just a collector? Is there anything we're doing with the fintechs or can do with the fintechs in order to achieve that, whether it's through banking systems, through apps? How can we help those that are in a smaller economy?
Yeah, so I think both of us are very good partners. There should be a partnership between governance and the industry players. So the fintechs are a very important part of the economy. And even globally, we can see now the businesses that make the most in terms of turnover are really the digital companies. And recognizing that, the major move by the state has been to digitize all our operations. So we have a self-service system, our e-tax, and people can log into our e-tax and carry out all their tax transactions. It's an end-to-end tax administration solution. And that's really helped in moving our numbers the way that we have been able to move them. The fact that people from the comfort of their homes can actually do their tax business is really a great thing for us. But we also have to recognize that we are a society that is not so high-tech. I'm talking in terms of the larger number of people. So yes, all the fintechs are fully digitized, while we have a lot of individuals who might not be that, tech savvy. So we cater for all manner of taxpayers. How do we intend to go through that? First is by accepting this partnership and fostering that relationship and making sure that we embrace all the fintechs in all what we do through different fora like this. This is an excellent fora that you guys have put up, for instance. And we need to come up with more theaters where we can both exchange our ideas. And we can also rely on probably the fintechs to help us train trainers who will have an ultimate larger reach to members of society. We also, on our own part, have different locations from which we operate. And every division of Lagos has tax stations and mini tax stations. And in all our tax stations, we have what you call the tax champions. So members of the public can actually walk into our tax stations, and we have operators who will ensure that they can get all their business done. So that's one way we hope to be able to really get our people into this new type of system that has been created. We also have other soft ways of getting them to participate through USSD, for instance. So you don't have to have a high-powered device in front of you. People can use simple phones and also operate their tax affairs. But more importantly, partnership with the fintechs is a key to helping us improve on the advocacy and enlightenment.
Fantastic. Our time is running a little short, so I'm going to just go into a few of the lightning round questions. So these are very simple. And Mrs. Bai, you're always so very transparent, so I really appreciate you taking this time. So by 2030, do you believe that Lagos will be completely a cashless economy and using credit cards? Yes or no?
I'm not sure because of the culture of the people.
Yes or no?
People,
I'm going to push you a little bit. What you
it's difficult.
look at this?
I'd say no.
Okay, no. All right then. So fantastic.
This is the sort of question that it's neither yes nor no. It depends on the circumstances you're talking about. But the cashless system is really catching on. Many years ago, people had to go to banks, queue in banks, and do all that. But right now, they don't have to do so anymore. Thank God to all the fintechs that have come up. So people can spend and do whatever they want to do now. So by 2030, would everybody have acquired the necessary know-how to make it a truly cashless society? I'm not so sure, but time will tell.
Okay, all right, all right. Do you believe a tax ID will one day be more important to Lagosians' growth than a university degree?
Jamila, that's a very tough one. Well, the tax ID is a very important component of the tax reform generally. And we have tax IDs so that we can identify all the taxpayers in the state. So hitherto, when all the states just wanted to generate revenue, people were allowed to create tax accounts. People would walk into the bank to make payments, create tax accounts. Each time they wanted to make every type of payment, they would just go into the bank. So invariably, some people had 10 accounts, some had as in payer IDs, some had 15 payer IDs, and so on and so forth. So at the end of the day, our identity management system had to be improved upon so that people, through biometrics, can have one main means of identification. Right. So that's what the tax ID does for us, because it's important for us to know how many taxpayers we have in the system. It's important for us to be able to predict how much revenue we are going to make, because that helps our planning. It helps, to plan for the projects, and, it's important to know how many people we have in the economy. So the tax ID, just like Social Security in the US, is a very, very important means of identification.
All right.
Having a degree is a totally different ballgame. But I think
totally
I'll
didn't want
stop
to
at
put you on
that
the
because
spot.
I've made the point.
Thank
Yes,
you.
I've made the
you.
main points. Your tax ID is very important. It's a starting point
Right.
for everybody. You need to register and get a tax ID.
Absolutely. Absolutely. So these next three questions are literally yes or no, and I'm going to press you yes or no. So please help me with this. So the next one is, can Lagos realistically surpass Cairo to become Africa's #1 economy within the next 5 years?
Yes.
Awesome. In the future, will AI agents, not a human, be the one helping Lagosians file their tax returns?
Yes, it's a big possibility.
All right. All right.
The way we're going, yes.
I believe so, yeah. So after all the numbers and the data are in, do you believe Lagosians are fundamentally the most hardworking people on the planet?
Anytime, any day.
Anytime,
Lagosians
any
are
day.
very
Thank you.
hardworking. Yes,
Thank
it's
you so
evident
much.
from the amount of commerce that goes on in Lagos and the growth of Lagos. Everybody wants to come and live in Lagos right now.
Absolutely, absolutely.
The testimony.
Chairman, it's been an absolute honor. It's been a pleasure to hear your vision for where this can take us. And I would just have one request from you. If we can have a call to action from you today, putting that human face behind the taxes. If there's one thing you want every founder, every person on this phone call today, every developer, every investor watching this through this Zoom to help build Lagos, the dream that you have in mind, what can we do to help to do that?
Simply pay your taxes.
All right,
If
all right. So
if
you're
you
gonna
all pay your taxes, then we can build that dream that we need.
you've
That's the
heard it
one.
here. You've heard it here, everybody. So thank you so much. Today, you have had the opportunity to hear directly from the chairman of LIRS, Mr. Ayodele Subai. You've heard from him that he's ready for partnership, a social contract, and to build a legacy. This is going to help us to do all the things, whether it's from railways to BRT buses, to be able to even build schools that are better for our future and for our kids. We are so happy to be able to be a part of this conversation. So ladies and gentlemen, he's holding the keys to Africa's 5th largest economy. Please give a round to Mr. Subai for his time today. We thank you so much, sir. I think
Thanks for
seems like
having me. Thank you.
they have given us time. They said if we can take one question from the audience, we would love to do that. Is there any one question? Please raise your hand. And Tony, if you can help me, if you can help to call the one person who's going to get a chance to ask the question, Mr. Swag.
So I don't think they will be able to come up to ask the question. But we have some questions in the Q&A. Let me see if there's any question that relates.
Captain, I thought you had some things you wanted to talk about because you said you wanted to practicalize. I heard all that conversation, and you said you have some issues with taxes generally. So maybe we can start with your question. Sorry to put you on the spot.
Do you want to take that? Was that directed to who would you like to take that question, Mrs.
Jane, there's only one captain on the ship.
Okay.
Oh, great, sir. I didn't know that was for me. Thank you for the blank check. Just that I don't have enough time. I'm also the captain. I need to manage time. But yes, I do. I do have questions. I must give it to LRS. LRS has the most advanced e-tax filing system when it comes to state filing. So kudos to you and your team,
Thank you.
work that you're doing. But regardless of that, there's still some, will I say, hiccups with the process. And another thing I've realized is that when it comes to personal filing, a lot of individuals in Lagos are not even aware about how to go about this. Then secondly, also is that when withholding are remitted in bulk, sometimes for the companies that get to withhold, They get to remit, the withholding is paid in bulk. They provide the TIN of the beneficiaries, which is sent to LIRS, But what we've seen over time is that this is not being credited into their account. But something I've been telling people is that with this new tax reform, I believe that every state tax body right now will be stepping up their game in terms of expanding, the functionality of whatever tech solution that they have. So I just wanted you to speak regarding this and to help, put into perspective all this, because there's a lot of gray areas at the moment that a lot of us cannot, confidently speak to. Yes.
Okay, so that's a great thing about technology, leveraging on technology. So I think you're talking about events that happened in the past. So in the past, people would withhold from all the various contractors and remit in bulk. But there was one missing information. Whereas they would put some of the taxpayer IDs of the contractors, many of the schedules that come to us would not have the taxpayer ID. So if we don't have a taxpayer IDs, we are unable to credit the various accounts. But the beauty of everything is that since e-tax came on board, everything is totally automated. When you want to make your remittances, you're supposed to create a bill reference. After you have created your bill reference, you're supposed to be able to upload your schedules. You must show every individual that you have taken money from, and you must put their taxpayer ID. Now, if there's anyone on the list that you have not put the appropriate taxpayer ID, you will be unable to upload. So it's a self-checking system now. But like all other environments, at times you run, the legacy system alongside the new system. Now we've been running both side by side for some time. So it's still possible for some people to make payment without availing us with the schedule, the breakdown of who they are making payments for. So if we shut down our legacy system, what has happened in the past, and I'm being truthful and practical with you, what has happened is that when we shut down the legacy system and make sure that everybody who wants to pay must upload the various taxpayer IDs, what happens? There's pushback. All of a sudden, people do not remit. All of a sudden, our revenues start to go south. And it's happened 2-3 times now. So what's the natural decision? You turn back on the legacy system so that you don't lose revenue. And at the same time, there's always advocacy. So we keep on telling and using the Pareto analysis, most of the people who remit the material amounts are fully computerized, they're fully automated. So, but we still apply that human face by looking at the minorities who are not yet fully computerized, that's why the legacy system is still running, and that's partially manual. Now, our partners include all the financial institutions, all the banks. Now, we have told the banks not to accept payments if the names, for withholding tax, that is, if the names of the contractors are not there or the vendors, because they are simply going to lose their tax credit. The whole idea of remitting that is to have credit notes, which they can use to offset their final tax computations. But we're trying very hard to change that system, and it's changing very fast now. That's why I said maybe you're talking about past. In most of the cases now, and even on our e-tax system, every taxpayer has an account. So when you log into your system, you can see your tax history. You can see all the payments that you have made. You can see all the payments that have been made on your behalf. So that's how robust the e-tax platform is. So we keep on appealing to everybody to try and migrate fully onto the e-tax platform and not rely on using the EBS, that's the name of our legacy system, because over time we're soon going to really shut that down. And there's another platform called the Lagos Revenue Portal. And with the Lagos Revenue Portal, it's also gradually going to shut down, and that's used for non-tax remittances. Tax remittances come through e-tax, and non-tax remittances go through the Lagos Revenue Portal. Eventually, it will be fully integrated, and people will not be able to operate manually anymore. It's going to be totally computerized.
Thank you so
And
much.
that will stop, it will stop the menace that you're talking about.
Yes.
Right, right. Thank you so much, sir. Thank you for your time, for your transparency, and for taking the opportunity to really come and speak to each and every one of us so that we will make sure we have our tax ID, make sure that we also pay our taxes and be able to migrate to the e-tax system. So Toyin, back over to you, sir. Thank you once again from all of us at FintechNGR.
Thank you very much. Thanks for having me.
You're very welcome.
So Jamila, thank you for steering the conversation in the right direction. You just took it to another altitude. I didn't make provision for this. But I'm the captain. I'm capable of anything. Dr.
Yes,
Aya,
sir.
by the way, I think there's an area that you people are not you're not getting the revenue you're supposed to be getting. So I'll be reaching out to you after this event
Please
to
do that.
yes, because just as you said, we are all partners and we're here to make your
Yeah.
job easier. Yes, I promise to do that. Thank you so much for joining us today, sir. Thank you.
I wish you good deliberations for the rest of the day.
Thank you, sir.
Thank you.
I know I had promised that we're going to spend 1 hour, 30 minutes, but you know that sometimes when you're in the hair, you just enjoy the conversation, the attitude. So I will crave your indulgence that we will just take a little minutes more, above the 1 hour, 30 minutes. And at this point, I'd like to bring back on board my panelists. Please, I'll just be asking you one more questions, and I'll like to hear your perspective before we try and round up, today's conversation. So my first question would be going to so Dotun, this question is for you. So let's say that if you're assuming you're launching today, Dotun, please, are you still on this call? Unable to see you.
Yeah,
I believe.
yes, I'm here.
Oh, fantastic. So assuming that you're launching today, you're just launching your fintech for the first time today, under this tax regime, which is significant, which has changed the landscape when it comes to taxes in Nigeria, what would you do differently? Because I believe that we have new fintech founders that are on board and they are still thinking of how they will go about this. So what will you do differently that you believe will give you a competitive edge?
All right, thank you, Captain. I think that first is that the conversation has been very rich today. The feedback and the conversations from the chairman or the executive chairman of the LIRS has been very insightful. The calmness of delivery and all that. But if I was launching or was starting OP today, or any other organization, any fintech organization today, I think that the first thing that will be in consideration for me is that I will build flexibility into the architecture from day one. So that you have modular fee structures, you have clean separation between revenue and pass-through funds. Because as a fintech, you have lots of funds that are sitting in your ecosystem, but they're not necessarily your funds. They're just passing through and get there. And so the ability to properly classify these funds are very, very important. And having configurable tax logic within the transaction rules engine. It's something that's very important because today the tax law says this today. We don't know what will happen tomorrow. Will there be changes to the taxes? Will there be changes to the percentages? Will there be changes to how a particular tax applies? In the earlier conversation, somebody mentioned something around stamp duties, and that's something that we actually experience on a day-to-day basis. When we're onboarding merchants and we're signing SLAs, you have to determine and agree who's going to bear the stamp duties, right? Is it going to be the merchant who will bear it? Is it going to be the provider who's going to bear? So if your systems are not engineered in a way that they can configure those kind of things from day one, then you're going to have a challenge going forward. Because anytime you try to retrofit the new laws to an old system, you get into significant challenges. So I would also think that it's important to simulate tax outcomes before setting pricing. Too many early stage companies, they price first. They're saying, this is how much you're pricing for this service before, and now calculate tax later, and then they run into troubles. And that compresses margins, and the runway runs out and things like that. So the key lesson is this: growth that is not structurally compliant is fragile. This new regime rewards operators who design for adaptability and transparency from inception. So it's important that we understand that we're in a new tax environment. I think those who are just starting out are lucky, so that they can set the proper architecture, design for the tax regime, and apply the discipline that is needed. Small miscalculations can lead to significant material exposure. So don't make those mistakes. Thank you.
Thank you so much for that apt response and practical response as well. Team, this question is for you. Please, we're having just 2 minutes so that we can still accommodate the other things we have to do. So in your own opinion, what operating or holding structures best mitigate tax exposure for scaling fintechs?
Thank you, Toyin. And it's a complex question, right? Because really, you have to think about what type of fintech are you going to be? Are you going to be a local fintech, or are you going to be a fintech that perhaps is setting up for Africa level, right? The reality of it is, when you're thinking about the structuring model, you also have to think about the exit model, right? And like what Dotun said here is, when you are starting, you need to simulate the options that you're looking at, right? The question I will ask myself is, should I, if I'm a significantly Nigerian business, will I want to set up my business in Nigeria and have the holding structure in Nigeria and then look out towards Africa? Or would I look for perhaps what I can call a favorable tax jurisdiction that has multiple double tax treaties and agreements, which would be my entry point for the other countries, right? So it's not a one-size-fits-all question. It's a much more complex and broader question. But perhaps if you were to ask me, what are the considerations for the Nigerian business, I would say that the current pieces of legislation have defined some certain significant things that you have to think from a local perspective and from a cross-border perspective. Obviously, for startups, and this has been spoken by the earlier speakers, Dr. Tunde and Dr. Ayo, you need to think about, if I'm below a million threshold in revenue and below 250 million in assets, it's a small company, zero tax, no stress about it, structure it in Nigeria, right? But then if I start to go out global, I have to start thinking about the cross-border transactions. Obviously, I have to deal with the minimum effective tax rate. I have to deal with the control foreign company rules, as well as the significant economic presence exposure. So these questions are really difficult to answer in a 2-minute conversation. And I would rather say that going back to what Dotun had said, is you need to strategically think this and workshop it at the time you're setting up, because you have to ask yourself, what is my long-term strategy and what is my short-term strategy, and how do I blend these two to come up with the right structure? Thank you, Captain Toy.
Thank you, Tim. That was good. Thank you. Allow me the last question, please. So what is the most effective engagement strategy when regulatory provisions appear unclear? Because at the moment, there's still a lot of gray areas in terms of interpretation. One of the things I was, especially like in the crypto space now, right? There's this silent confusion whereby people are thinking the government has said that they will start taxing your gains. The question is, how will the government get to know what my gains are? Will I write it on pen and paper anytime I make a loss? I take note of that, So the question is, there's this confusion regarding the regulatory provisions and how, it should be implemented. So what's your own most effective engagement strategy to managing things like this?
Okay, so I won't take too much of your time. Effective strategy in managing conflicting provisions of the law, clear provisions of the law. I think the first thing I will say is that speak to your tax advisor, speak to your lawyers. We lawyers, we tax advisors, we understand the law, we understand the interrelationship between various statutes, interrelationship between various sections of the law, where subsection give, subsection takes away. How do you interpret the statute, rules of interpretation of statute, those kind of skills, you find them with your advisors. So when you are in a situation, when you're in a crossroad in relation to what to do and how to do it, I think the first thing is to talk to your advisor. Our advisor will hold your hand and guide you on what to do. And the next thing I would say is that one of the beautiful things that this new tax regime has done is to hold or tend to hold the tax authority by their words. Before the Nigerian Tax Act, we did not have clear provisions that hold the tax authority accountable for the rulings in which they've given you when you go to them to get clarification. Under the old regime, in fact, there are legal authorities, case laws that said that tax rulings by the tax authorities are not law. They are only an expression of their understanding of the tax rules. Imagine a taxpayer who got a tax ruling before entering into his transaction from the tax authority. And at the end of the day, the tax authority came back to say, no, the advice I gave you in respect to my understanding has changed. How can it change? And they came to court and argued before the court that their rulings are not laws. Their circulars are not laws. And it was upheld by the courts. But now with the provisions of the new Nigerian Tax Act, Nigerian Tax Administration Act, where the tax authority gives you certain ruling and clarification, you can hold them by those clarifications. So where the ambiguity, it's also for you to engage with the tax authority, get a written ruling on your transaction. And when you are applying for those rulings, it is usually technical letters. And why is it technical? If you don't understand the provisions of those laws, the interrelationship between the various provisions of the law with respect to that transaction, you may not be able to write a convincing, application for a tax. And that is why you also need to talk to your advisors when you are seeking this clarification from the tax authority. And when they give you this clarification, in the absence of you giving them false information, false background, getting these ruling or clarification by fraud, then those clarification will be binding on the tax authorities. Thank you.
Thank you very much for that apt response. So I know we have some questions, but the truth is that we don't have enough time to accommodate this question. So please, the panelists, if you can look at the Q&A, if there's a question that relates to probably what you've said, can you kindly just type your answer? Because will not be able to take on all the questions at this point. But I wanted to leave us with something very practical. So I know Tim spoke about the opportunities that exist, and Dr. Stanley also talked about the fact that fintech must see these new tax reforms as a competitive edge. And I think every one of us must have that mental shift. Where we see it that way, we'll see the opportunities that exist. I just talked about the crypto fintech and how they'll be taxed at the moment. If I'm a crypto founder at the moment, what I will be thinking about is how do I create like a small ledger that keeps track of, my customers' win and losses, so that at the end of a tax year, what I need to do as a user of your platform is just to go and download probably my statement, and I'm able to have a like a bankable evidence that at the end of the deal, while carrying out my crypto investment, this is the profit or loss, that I made over the period of time. So these are like practical ways that we must start thinking about the tax reform, and we must see it as opportunities. So guys, in the next 5 minutes we'll be concluding this conversation. However, at this point, I am dropping my hat as and I'm dropping my hat as the moderator and as the captain of the ship, and I'm wearing the cap of a founder. I want to introduce you people. I want to introduce you to something very interesting and exciting. In 3 minutes, I'll be doing that, please. So come along with me. It's simple. For the longest time, when it comes to state taxes, they are fragmented. Even at this moment, the processes are still fragmented. And just as I said earlier on, the most robust, will I say, tax system that we have right now, um, exists only in Lagos. A lot of states are still falling short. So, one of the uproar that I saw in the social media space especially when I think the head of um, the president of the fiscal committee said that everybody must file personal income tax. And people are like, okay, where do I even start from? What do I have to do? There was that silent confusion. People do not even know how to go about this. And that's when I thought, and I'm like, okay, I think this is a problem we need to solve at this point, because even for us as consultants, it's very challenging when we have to do with multiple states, especially states that don't have this robust tax system, tax filing system. And that's why we created this product called Simple Tax. I'm trying to share my screen at the moment. We created this product called Simple Tax, just as the name implies. Everything on the platform is very simple. It helps you to file your personal income tax, right, in all 36 states, not just file, to pay as well, in all 36 states. And you can do it just from one platform. Now, apart from that, one of the things also that we had seen before now is that, please, can you see my screen? If you can see, just give me a thumbs up. Fantastic. So it helps you to file your personal income taxes. And when we say personal income taxes, not just personal income tax, state taxes. So it could be your personal income tax, it could be your pay as you earn, your withholding, stamp duties. The great thing about this platform is that you have a dashboard. I'll quickly log into my dashboard so that you see how my dashboard looks like, right? So you have a dashboard where you have your tax calculator. If you're unsure, before you would go and pay in excess to the tax authority, then you are now fighting for refund that you may never get. You have a tax calculator here to guide you, on how you can calculate your taxes. Then you can definitely then proceed and say that I want to pay my tax pending payment that you've not concluded. You have them here as well. The good thing also is that it helps you keep all your invoices here. So for people that are in the tax space for the longest time, you will know that one of the major challenges that you would face, especially if you have to file your personal return at the beginning of the year, is being able to collate all those evidences. So now there's a platform that if you use this platform to make your payment, automatically it stores up all your receipts. And at every point in time, if you need it, you can just go on the platform, you could download it and you could upload it, wherever or for whatever use you may have it for. Also, for let's say you're a freelancer, you have like a side also all your supporting document you could also store them up. I also said something about withholding tax before now, which is withholding tax you are paying on behalf of someone else. And in accordance to the law, the main evidence that I must have to be able to claim my withholding tax is a receipt that amount was paid, was remitted. So the question is, most of the time, people, like if withholding has been withheld from you, you don't even have a receipt, right? But with this platform now, after you've made payments, you can easily send the receipt just by, I don't have any receipt here, please pardon me. So, so you can easily send, just by a click, you can easily send a receipt to someone, right? To the person that you paid on their behalf. above, this is just a preview of the dashboard. Yes, so if you'd like to have more information about this, please, I'm sure that in the chat box, probably there's a link for early sign up. We are actually launching this Sunday. So it's going to be up and running this Sunday. So thank you guys for listening to me. And I'm back. I'm removing my hat as that of a founder, and I'm back to being your captain at the moment. Thank you very much to everyone. So I would like to round up this conversation. I think we've had a swell time. Definitely we had a swell time. That's why we even overshot the time that we had planned. But the truth is that as we begin our descent on Flight FinTech Outlook 2026, I want to sincerely thank you for flying with us today. We set out to cruise at a higher altitude, navigating the complexities of the new tax regime, and I believe we have done just that. We have explored the terrain, addressed the pressure points, and gained clearer visibility for the journey ahead. There may be evolving policies, shifting regulations, and new compliance expectations, but one thing remains constant: our collective ability to adapt, collaborate, and lead the conversation. As we land this plane, I encourage you not to disembark with just notes, but with strategy. Not just insight, but action points. The real journey begins after today in the boardrooms, in the compliance units, regulatory engagements, and innovation labs. On behalf of FinTech Association, thank you for your time, your engagement, and your commitment to shaping a stronger and more resilient ecosystem. I'd like to thank all our panelists and all the speakers, our distinguished speakers, for taking out time out of their busy schedule and being part and making FinTech Outlook 2026 a huge success. This is Captain Tony Olufon signing off. Until our next flight, keep navigating boldly. Thank you, everyone. I hope you've learned something great from today's conversation. Thank you. So let me say something also. I think I'll just tell them to copy out all the questions. We are unable to respond to them, but I promise that we'll respond to them via email. The organizers will send the response to everyone. Thank you very much for your time.
Thank you, and do all have a nice evening. Bye.
Bye, everyone. Bye, everyone.
Bye, everyone. Thank you very much.
Yeah.
Bye-bye.
Bye.